Now, the B part of this problem wants us to calculate the taxes that they would owe under various scenarios here. And it reads as follows. It says, calculate the firm's tax liability if it sold the machine for each of the following amounts: $100,000, $56,000, $23,200, and $15,000. Now, each of these things now is going to lead us to possible capital gains, possible depreciation recapture, and we're going to work the first two of these scenarios first. So in the first scenario now, they say we sold the asset for $100,000. The original depreciable value of the asset, you should note, was $80,000. And in the A part, we calculated the book value of the asset. The book value of the asset is $23,200. Anytime you sell an asset for more than its original depreciable value, you're going to have a capital gain. So the difference between $100,000 and $80,000, that's a capital gain of $20,000. If you sell an asset for more than book value, but less than the original depreciable value, that's called depreciation recapture. So the difference between $80,000 and $23,200 is depreciation recapture, which in this problem is $56,800. The problem told us to use 40% as a tax rate on any gains. Just so you know, in practice now you would have a capital gain tax rate and you would have a tax rate for depreciation recapture. But this is what they told us in the textbook. So if we owe 40% of the capital gain, $20,000 times 0.40 would be $8,000. And 40% of the depreciation recapture of $56,800 gets us $22,720. So if you add those up, under the first scenario where you sell for $100,000, you would owe a capital gains tax and you would owe taxes on depreciation recapture. The total tax you owe, $30,720. In the next scenario now, they tell us we sell for $56,000. Now, there is no capital gain here because we didn't sell it for more than $80,000. So the gain that we're going to have here is going to be the difference between the selling price and the book value at the end of the third year. And that's simply depreciation recapture. And in this problem, we have depreciation recapture of $32,800. Multiplied by 0.40, 40%, we get a tax we owe of $13,120.